Time now for a check of what's happening in the world of business. Our business editor, Kate Moody's here. Hi there, Kate. Now, quite a bit of turmoil on Wall Street during the course of the last week, and today there are signs that tighter regulations might be in the pipeline.
Possibly, at least speculation about it. A lot of talk in the last week or so. And now the U.S. Treasury Secretary Janet Yellen has called a meeting of market and financial officials to discuss the trading frenzy of the past week. The heads of the U.S. Securities and Exchange Commission and Federal Reserve are among those who've been summoned to examine whether trade has been consistent with fair and efficient market rules. There's some speculation they could begin talks on tighter regulations, in particular of online brokerage platforms like Robinhood, which restricted trade of GameStop shares during their meteoric rise last week. Amateur traders had been pouring money into shares of that struggling video game chain and a few others in a coordinated effort to squeeze big hedge funds who had bet against the company's fortunes. The stock has erased over half of those gains this week, but it's trending higher in a choppy session today. For more, we can speak to Dr. Richard Smith, longtime market watcher and CEO of the Foundation for the Study of Cycles. Thanks for joining us on France 24. Now, the trading frenzy of the last few weeks has really thrust trading platforms like Robinhood into the spotlight, and they basically let amateur traders or laymen into the trading game like institutional investors, but their real business, of course, is selling data. Are these online brokerage firms a game changer?
Well, first, thanks for having me. Appreciate the opportunity. And I do think that there's a lot going on here and there's a lot to examine. And yes, there are changes in the game going on. And yet I think there's a lot of things going on behind the scene that definitely merit closer scrutiny in terms of healthy capital markets going forward and also a healthy place for the retail investor in the capital markets.
What could that entail, in your opinion? Do you think this is going to be a real change in terms of regulation and oversight?
Well, I think that hopefully what's going to come out of this is a little more scrutiny about what's going on behind the scenes. Not that many people realize that Robinhood makes money off of a percent of the spreads, the difference between the bid and the ask in the markets that they deliver to market makers. So a large portion of their revenue, not clear exactly how much, but a lot of money gets paid to Robinhood by market makers. And the wider the spread, the better for Robinhood. They make a percentage of the spread. So you look at what happened in GameStop over the past week and stocks like GameStop, and there was a lot of speculation, a lot of options trading, which also Robinhood benefits a lot from, and so do the market makers that buy data from Robinhood, and with very high spreads and a lot of options premiums. So I don't think most of those trades are going to end up working out well for the people that bought call options at $300-400 a share for GameStop. And I think that we really need to look at whether free is a great model for retail investors when there's all kinds of hidden costs and hidden incentives that I think create a bit of moral hazard that I hope the regulators will take a look at.
Now, there was a bit of an outcry from a number of quarters last week when those kinds of platforms restricted trade in GameStop shares. Is that a breach of trust in terms of its client base, or is it really just what you expected from them?
No, I think it is a breach of trust. And frankly, it's not the first time that it's happened. If you remember back in the crash of March of 2020, there were issues with Robinhood being offline. So there's this incentive for engagement and growth and transactions and activity. And that's the incentive of Robinhood's business, incentivized in collaboration with the market makers. And then when the capacity kind of to manage all of that engagement and growth falters and fails, that's really the responsibility of Robinhood. So when your business is incentivized on engagement and growth and transaction at any cost, and then you don't have the capacity to really sustain that for your customers in the moments of crisis, I think that's a serious concern that anybody would be justly concerned about.
Do you agree with the characterization of last week's trade turmoil as sort of a David and Goliath battle? And do you think we should be prepared to see more of the same?
I do think there's a David and Goliath component to it. I think that the early investors in GameStop did some really smart things. I think they understood very deeply how the markets work and how hedge funds work. And they played the game exquisitely according to the rules of the street. My concern is more for the few million participants that came into the game quite late. And I think that they're going to end up, holding the bag. And so I think that, it was impressive, and I sympathize with the David versus Goliath narrative. But I think it's got some gaps.
Richard, just one more question about your overall impression of the state of equity markets at the moment. Do you think we're headed for a stock market bubble?
It is a concern. And one of my biggest concerns about episodes like this is, and the whole retail investing frenzy, I've been a big advocate and proponent of retail investing my whole career, but I'm concerned that a whole generation is at risk of being, sorely disappointed and being turned off from the markets long term. I hope that doesn't happen. And I do commend Robinhood for getting so many people interested in the markets. I just want it to be a resilient, long-term experience where a whole generation is, loving capitalism again. And I think that the GameStop trade is not really the heart of capitalism. That's really short-term trading, kind of, warfare, right? So how do we get young people interested in the markets and capital allocation, for decades instead of just for days or weeks?
All right, Richard Smith, thanks for that insight into what's been going on in the markets the last couple of weeks.
Thank you.
And with that, we'll take a look at what's happening on the markets today. Wall Street is trending slightly higher as it enters the last hour or so of its trade. Shares of Google's parent company, Alphabet, are up more than 9% after it reported a 23% jump in revenue growth. That was driven by its online advertising business. The Nasdaq up about a third of a percentage point this hour. A flat close for stocks in London and Paris earlier on. The DAX was up 0.7% in Frankfurt. Stocks in Milan jumped 2% on optimism that former ECB President Mario Draghi will be able to form a new Italian government. Meanwhile, fresh data show inflation in the Eurozone rose to 0.9%, reversing a 5-month downward streak. U.S. President Joe Biden expects some Republican support for his COVID stimulus package, but he said he will push ahead regardless and urged his party members to stick together. He and Vice President Kamala Harris met with top Democratic lawmakers just 2 days after a group of moderate Republicans pitched their own stimulus bill worth around $600 billion. Biden's own proposal would hit $1.9 trillion, including $1,400 stimulus checks, support for vaccination programs and school reopenings, and money for local and state governments. Senate Majority Leader Chuck Schumer said there was universal agreement among Democrats for their package. Take a listen.
We hope our Republican colleagues will join us in that big, bold program that America needs. The vast majority of Republican voters support large parts of the program. We want to do it bipartisan, but we must be strong. We cannot dawdle, we cannot delay, we cannot dilute, because the troubles that this nation has and the opportunities that we can bring them are so large.
Calls for big and bold there, Tom, but we still need a bit of action happening there on Capitol Hill anyway.
All right, apparently no dawdling allowed. Well, there you are. Thank you very much indeed, our business editor, Kate Moody.